Good, thank you. Okay, so it is 10:30. There's people just joining, so we let them go on ahead and we'll begin. Good morning, everybody. You're very welcome to our budget debrief this morning. So this morning we are going to look at the impact on business of the minister's announcements yesterday. And I'm joined today. Thank you, David Broderick from the Small Firms Association, for joining us, and to Tom Francis. Good morning, Tom, Head of Accounting at Kenure. First of all, I'll ask David and Tom, I'll ask you both just to introduce yourselves briefly. We'll then we'll ask Tom to go through the main measures that were announced yesterday in the budget. It was a giveaway budget. It was an election budget. And it was a total package of 10.5 billion. So I'll be interested to hear your measures first, Tom, and then we'll move to you, David, in terms of your insight into the announcements. Okay, so first of all, David, over to you. If you can introduce yourself, please.
Sure. I'm David Broderick. Good morning, everybody, and thanks for having me on. I'm David Broderick. I'm Director of the Small Firms Association, which represents all companies across sector with 50 employees or less, which is a fairly sizable cohort. It's actually 98% of all businesses in Ireland, and we employ just under 46% of the total workforce. I'm also responsible for Childhood Services Ireland, which is the childcare group, and I'm also responsible for Mentors Work, which is an initiative we run with SkillNet to help SME business owners. So that's my remit.
Super. Thank you very much, David. And over to you, Tom.
Good morning, everybody. So Tom Francis, I'm Head of Accounting here at Kenure. So my areas of specialty would include kind of accounting and tax relating to SMEs. And day to day, I would oversee a team of accountants working with high potential startups, SMEs, guiding them on their business journey, and while at the same time taking care of their statutory requirements.
Super. Thank you. Thank you, Tom. And it's great to have you both with us. For anybody watching the webinar today, the chat function and the Q&A function is there. Please do use it to ask any questions you have for either David, Tom, or indeed myself. We will do our very best to answer any questions that come in. There are a few questions that have come in prior to the webinar, so I'll ask those as we go through the next hour or so. But do please use the chat function and ask any questions that come to mind. Okay, let's get started then, Tom. If we can start with you, please, and if you can run through the main measures for business that were announced yesterday.
Okay. Yeah. So what I'll do first, I'll just kick off with income tax. Even though it doesn't technically impact business, it will impact kind of directors, employees as well. And yesterday, what we saw was increases to the main tax credits, personal credit, employee credit, earned income credits. So they went up by €125 to €2,000 per year per person. So most of us will save around €250 there on the two credits. The standard rate cutoff point also increased by €2,000, so now it'll be 44,000. With proportionate increases for married couples, civil partners. We saw a decrease in the USC, so it went from that middle rate went from 4% down to 3%. So that covers that kind of income window from 27k to 44k. Yeah, and because of the changes in tax credits, then if you have a single person earning €20,000 or less, they'll actually be exempt from the income tax net now going forward for 2025. They will, of course, potentially be subject to USC and PRSI as usual. And just by way of scenario, like we have Jonathan, he's an employee consultant, earning 90k per year, working from home, half the year. And the same is expected for 2025. He's expected to make a saving of just over €1,000 in income tax for 2025. So there is positives there for people who are directors or employees. Jumping over then to the business hospitality capital gains. So as we know, probably most of us know at this stage that the 9% VAT rate for hospitality will now not happen. Instead, businesses will be given a cash injection in the form of the €4,000 Power Up grant, which will be paid, they're saying before Christmas. Devil's in the detail, but essentially it'll be linked to the rates bill. So we'll get more information hopefully later today on that. The business VAT registration threshold has gone up. So €80,000 it was for goods and 40,000 for services. That'll change to 85k for goods and 42.5k for services. So a little bit of good news there. Business BIK I put down there. So benefit in kind, and they're talking about electric cars. So extension of the existing BIK, I suppose, arrangement. So 45k is the relief that you can be exempt from BIK on electric cars. They extend that for another year. And there's also the BIK exemption on the provision of electrical vehicle chargers at the home of a director or employee. So that will help. On business pensions, the auto-enrollment, which effectively is a retirement savings system for employees who don't already have a workplace pension scheme in place. The commencement date has been pushed back to September 25, which will be probably a short-term saving, but a welcome saving for employers. Yeah, so year one, the contributions start at 1.5% of gross pay. So pushed out to September, so definitely will help with the budgets there. Interesting actually on the auto enrollment, employees aren't expected to get a tax deduction for their own contributions. Essentially they're saying because the state is matching those contributions. So that's that. Business foreign dividends, it probably more impacts kind of those kind of more international businesses, but one of the major announcements in terms of the business landscape was that participation exemption, they call it, for foreign dividends. That'll come into place for the start of January. And really it allows dividends from foreign subsidiaries without incurring additional tax liabilities here. So double taxation, etc. The R&D tax credit. So yeah, that's been on the table for a bit of time now. So the R&D tax credit incentive is designed to really encourage investment in R&D by companies in Ireland. And as part of Budget 25, there will be an increase in the first year payment threshold from 50k to 75k. The aim here is to provide further cash flow support for companies with smaller R&D projects. But very meaningful. But again, what we've seen is R&D can be quite complex in terms of how it operates, etc. And I know that they've alluded to the fact that they need to look at that in terms of how they can make it more beneficial. The business small benefit, I was delighted to see that actually, the small benefit exemption increase from 1,000 to 1,500 euro and to include 5 non-cash benefits to be granted by the employer in a single year. That's currently two non-cash benefits, and it can be quite difficult actually to manage that throughout the year. So that means that workers could receive up to 3 additional tax-free benefits. That's rewards or gifts. Could be things like rewarding performance or marking significant life events or whatever that might be. But the cap will increase to 1,500 now, which will help there as well. On the corporation tax front, corporation tax relief, which grants startups a corporate tax reduction really for their first 5 years of trading, has been enhanced. And the enhancement really will support new startups aimed at smaller owner-managed businesses that might not necessarily have employees on the payroll at that very early stage. And basically, those businesses can reduce their corporation tax liability or even get tax refunds if that's applicable. Linked to the PRSI class S, which is the typical PRSI rate for those owner-managed companies. So you could get back some of the PRSI that's been paid on your wages. So that could help. For capital gains tax, then the business retirement relief. So that's a tax relief available to individuals 55 or older who basically are selling their business or farm, and they can reduce or eliminate the capital gains tax they would otherwise owe on the sale. Now, the extension to the upper age limit of 70 is being retained, no change there essentially, but changes made to provide for a clawback if there are disposals by the child or children above the 10 million euro cap, and that's within the 12 years of receiving the assets. So the 12 years is probably the pinch there almost. So it's a long period of time to have to wait to retain the assets.
Yeah.
With business PRSI, then employers' PRSI is to increase. It's already been scheduled anyway that the PRSI rate will increase to 11.15% from the 1st of October, and obviously further increases then planned for 2025. So again, that's a direct cost for employers doing business there. On the
Yeah.
EIS and the SURE.
Yeah, sorry. Yeah, go ahead, Tom. Sorry, I didn't mean to interrupt you.
No, you're okay. Do you want to jump in, Larissa?
Um, yeah, I wouldn't actually mind going over to David for a moment just to see, because there's a lot there, isn't there? And David, you have been involved in a lot of the discussions with government and lobbying for particular packages. And what are your thoughts on what we heard yesterday?
Um, an emotional roller coaster, I would have called it, Lewis, yesterday, because when you were first sitting there and the announcement was coming out, I think I was kind of totting up quite quickly. About 80% of what we'd asked for, we'd got some sort of acknowledgement, and it's happy days. Unfortunately, and it's something for the listeners today, the devil in the detail is something that you're going to hear time and time again through this webinar. I think, look, if you take a step back from this, from a bigger picture, there's infrastructure projects and fixing the waters and the leaky budgets. I think, look, they're really, really positive things for the likes of FDI and, good, clear signaling, I suppose, in terms of our intention as a country. But in reality, I look after small businesses with 50 employees or less. And I suppose the biggest issue, there's definitely some wins, which we'll go through in a second, but it'd be completely remiss of me to say that the biggest issue that small businesses have is the cost of doing business. We recently did a survey. It's cost of doing business, cost of labor costs, and difficulties attracting and retaining talent. We didn't get anything on costs. In fact, if anything, to point two, we got an increase of 80 cents. Now, when a lot of people, I suppose, look, in my position, I can tell you that the initial jump that was flagged for the minimum wage was supposed to be significantly higher than that. We got it was 12.4% last year. This is just around the 6%. But that doesn't really help our members who are just struggling with costs at the moment. And as you know, it's not just about the 80 cent that people are looking for. It's the knock-on effect that's going to blow up the wage scale, which we absolutely saw the last time they increased the minimum wage. So that's the negative side. So if you think costs, we didn't get anything in terms of labor costs, a bit of tinkering around the edges, but not, really just an increase of 80 cent. And the third thing, in attracting and retaining talent, was probably a good bit in there. Again, it took a while for it to filter down what are the specifics in the area. I mean, we specifically looked for the small business exemption, which is good. I think we also look the changes in the enhanced reporting requirements are something that, again, look, and I'm quite blunt in these sort of things, just ludicrous at the start. I think most people in your area will know about the Easter egg conundrum. So that was fixed in terms of how many gifts people can get. I personally wouldn't put a cap on it, but look, let's take the positives out of those particular areas. Again, you have the small business exemption itself is a very positive. There's a couple of other bits and pieces that are in there through the unlocking of the National Development Fund as well, which is, look, it's employers' money. It should have been given back. So look, at least we're starting to see that unlock. So they're certainly all the positives. As a general comment, it was a budget for all. It wasn't for hospitality. It wasn't for small businesses. Look, they did get the 4K, but we wanted to see targeted measures. And a big ask for ourselves was a specific PRSI rebate for those who are transitioning from the minimum wage to the living wage. We saw nothing around that. I suppose in summary, it was a budget with a lack of strategy, to be perfectly honest. It was a bit for everybody and no kind of clear guidance on what the overall strategy is. But then again, someone in my position, again, we have to be realistic. We've had the budget yesterday and we're already straight into election talks. So I suppose, look, as a starting point, we are happy with some of the wins. We could have got a lot more. We could have been a hell of a lot more targeted. And I think, there were some big losers. I certainly think the childcare, as childcare providers were big losers, which I think will have a knock-on effect on businesses in terms of places. So I do think that's a business issue, and I do think it was a big miss. But look, that's in general, I suppose, some positives, a few big negatives, and a lack of strategy.
Thanks, David. I want to pick up on 2 points. The first one is around the VAT, the lack of movement for the hospitality sector. What are your members' thoughts on that? Because we've had a lot of lobbying done,
Mm.
and we've got nothing in that budget yet, and no signal that there's anything to come or any discussion around it. I don't think it was even mentioned apart from the 9% on in some other services that are offered.
Yeah, there was a couple of tinkering on the VAT changes in specific area, but very small. Look, in my position, VAT 9 was talked about a long time ago. You know, we've been lobbying for a year on these changes because we actually, the one good thing about this budget is that at least it was better than last year, I have to say.
Yeah.
So we've been lobbying very hard. And look, I think the cost, the politicians made a decision in terms of the cost on VAT 9, and we in the Small Firms Association, although we would have liked it for our members, we were pretty clear from a long way out that it wasn't going to happen in terms of the overall cost. I will say that due to the intense lobbying by some of our colleagues in the other representative groups, it did look for a while that it might get over the line, but I'm afraid the maths just didn't add up in it. And it was a decision made, and I think, they will bear the brunt of that over time. I think they could have done themselves more favors and kind of highlighting that power up grant as to what it was. I don't think the communication was done quite well on it. So I would have thought we would have seen something else. And I'm not sure that €4,000 in a power up grant, which I believe will be, and I spoke to Minister Higgins yesterday on this, I believe it will be anybody who got the ICOB 2, that they will be the people that will fall into. And our opinion on just on ICOB and just on how they give these one-off measures, that the commercial rate system, that you leave a lot of people outside of when they're giving you the ICOB. That's grand for people who pay commercial rates, but you're leaving a sizable cohort out of the net there. So one of our budget asks was actually to say, look, if you are going to go and do something like this, the commercial rate system isn't perfect. So do the commercial rates because it's good and efficient in getting it out. But you need to put something in place for those other businesses who didn't get the increase the cost of doing business grant. And the other guiding principle would be stop putting in things where you need to put in emergency, stop putting in regulations where you need to put in, emergency measures to counteract those. I mean, it's counterintuitive. Just stop putting them in the first place. So that would be around the VAT. I don't think that issue is dead. I will say that when you do the maths of VAT 9, that as a mechanism, I would be very confident is dead. Because it's, I believe, somewhere in the region of 700 to 900 million, whatever way you cut it. And there's obviously things that get into rhetoric around, hotels in particular gouging, which I don't think is fair. I think, the market dictates the price value. So look, I think that as a concept is dead. I do see, and I did note Sinn Féin, picking up on our PRSI rebate ask as well. So I would see that as something that you could target specifically to these companies, but there is an understanding. There is a feeling when we meet government, they don't want to bring in anything more new, and the PRSI rebate as a system, they feel would be new. Obviously, we don't think so. We think the way they did the temporary wage subsidy scheme is the exact same model. I mean, revenue take money out of people's accounts every day. It's just setting parameters and putting it back in and costing it. So I think VAT 9 is dead. And unfortunately, but I think they will absolutely have to look at some other mechanism, which we think should be a PRSI rebate in terms of targeted supports. There's one for all, one for everybody in the office, in the audience isn't working. It needs to be targeted.
Well, it does need to be targeted, but it's geographically based as well. That there's the rural businesses are the ones that you've mentioned, hotel price gouging there from hotels in the cities, for example. There's the rural businesses suffer disproportionately whenever we talk about the lack of movement, I suppose, in the VAT rate. But I completely agree with you on the lack of announcements yesterday around the Power Up grant. I mean, that wasn't very clear. It wasn't communicated well yesterday. So that is one measure, I suppose, for those businesses, although of course they would say they would want much more. We might come back to the PRSI rebate in a moment. I want to pick you up on your childcare point, David, because for anybody on the call who's employing people today, childcare is an issue, not just for the families, of course, but for the businesses, and the lack of childcare and the price of childcare. And it was a missed opportunity. And I think this every year, if I'm being honest, whenever I look at measures that are introduced in budget, and the opportunity that we have to do something better and to do childcare well. and we seem to miss it every year. And yet, and again yesterday, there was nothing in it in terms of a long-term strategy to provide childcare, affordable childcare to families from whenever their children are ready to go into childcare at 6 months or a year. That's not there.
Yeah, look, as I said, I'm also responsible for Childhood Services Ireland, so I'm fairly informed on this conversation. It's amazing that there's never been such a heavy investment in the childcare sector, and it's never been so unstable. I think one of the ladies on the 6-1 News last night, who is a provider. So core funding is a mechanism. I won't get into the details. It's kind of very complex, but it's the mechanism that the government gives money to parents. And it's the mechanism that the government gives money to the sector. In political years, let's call it out what it is. They've been very, very good to parents. And, parents are going through a cost of living crisis. We absolutely would support that in terms of those areas. But the providers are being squeezed and squeezed and squeezed. And we do feel it's kind of a tipping point here. So as the lady on the news said last night, it's like the government is giving parents tickets to get on a bus that's completely broken and that the wheels are going to fall off. And I think we're probably hitting that crunch point now. You've providers who have got the same increase to cost, same increase of costs that the businesses on this call have. Yet they've been tied into a free freeze from lot 2017, but certainly from 2019 onwards, the way the mechanism works. There was a move to lift that free freeze, but unfortunately that's flawed as well. So places in childcare is going to be an issue. And somebody once said, if you close down childcare, you close down the country. And this is why I always bring it up as a business issue. And we do that at the SME and Entrepreneurship Task Force, the Enterprise Forum. This is going to be a business issue if it's not fixed. People not being able to come back to work, and again, disproportionately affecting females within that space, and females coming back into the workplace. So it is a major, major issue. Nothing in the announcement yesterday, but we do have a meeting with Minister O'Gorman at 12 o'clock today. So you will definitely see something come out of that. I have to say, I met with the minister last Friday as well in terms of reopening dialogue with providers, because the dialogue has just closed. It's not. There's no real mechanism for dialogue at the moment, and it's definitely an issue. And if I was a government at the moment, going into the next couple of weeks, I certainly see childcare as definitely second or third in the lists of issues going into election. And then of course you have the initial talks from some parties about nationalising the sector. You can't nationalise the sector if you don't have the providers on board. So
I know.
I think watch this space.
Yeah. That would be my view, that nationalising the sector makes sense, but obviously there's a way to go. Thank you, David, for that. I'm going to go back to Tom. Karen has put in the point that Tom, you were going to talk about the EIIS and SURE changes. So I wonder if you could pick up or bring us up to date on any changes on those yesterday.
Yeah, indeed. I suppose just to step back a second on the EIIS and the SURE, etc. So employment incentive, investment incentive scheme, and the startup relief for entrepreneurs. So they're both tax relief schemes designed really to encourage investment in business. Now, the EII is a tax relief to encourage individuals to provide equity-based finance to trading co's, while SURE is a tax relief for those starting their own business. So they essentially invest in their own business. Now, what happened yesterday then was the EIS and the SURE and the startup capital incentive have all been extended for 2 years until the end of 2026. With increases in the thresholds. So EII went from 500k to 1 million, that's doubling. SURE from 700k to 980k. But I suppose standing back from it all, what we find is they're really complicated to operate. Like the guidance notes are 100 pages plus. Complex released to avail of for the taxpayer essentially, and there's definitely concern in my own network around the administrative burden. So hopefully there will be some simplification measures announced as well when the final bill is released.
Okay. David, from your perspective, your members' perspective, were they pleased to see those changes or their announcements yesterday?
Yeah, certainly. The idea that we're going to look at them was very welcome, and certainly when you heard them. But again, Look, what our members want is simplification. Okay, the administrative burden is just too much. So, how easy is it? Does it apply to me? And they want this information as quick as possible. I think I would feel that although there were changes which are very, very welcome, the changes didn't do much to bring those people who aren't availing of these reliefs into the net, and that's the general theme. Yeah, okay, there is a change, and the limits went up, but I'm not sure those particular changes. Again, I'm not a tax specialist. I'll leave that over to the experts like yourselves. But that okay, right? What does this mean to me? I mean, look, I always say this: the two greatest assets business owner has, small business owner asset, is their time and their cash flow, and they're very poor on both. They don't have it. So if things aren't quick, easy to use in terms of their time, and they give a significant benefit within their cash flow, they just make that decision quickly and move on. Entrepreneurs don't have the time, certainly at the moment, and they can't get staff. So I'll go back to Tom's point. It's the simplification piece would be very important as is. And then I'm not sure that the parameters that were set yesterday really brought more people into those schemes. I don't think it'll be a huge driver into those schemes. Obviously, it'll bring some more in, but I don't think it'll be a huge driver to get people to take up those schemes.
So we're looking for a simplification in general. And do you think that by doing that, it would help bring more people into the schemes, David?
Yeah, I think, and look, I sit on the revenue task force for tax simplification. So again, I think this is where business. I come from a family business, by the way. That's why I would always take that view for our members in terms of what's it like to have a business. I think the complexities are over to experts like yourselves, but if we can simplify that for yourselves, or for anyone that works within the space, you will bring people into the net, and you will talk to your clients and advise them as well as you do, and make it easier for them. I just think as is at the moment, it's look, simplification is the key, and we're not going to see those particular details for another couple of weeks.
Yeah. Okay, can we go over then to inheritance tax and the retirement relief measures, Tom? A little bit of an increase in thresholds, which was well flagged, I think, prior to yesterday's announcement.
Yeah, I mean that's it exactly. So I suppose so. Retirement relief, as I said, that's the tax relief available for individuals 55 or older. Who might sell a business or a farm. And essentially, the retirement relief essentially gives them a reduction or elimination of capital gains tax they would otherwise owe on that sale. So in terms of, I suppose, the changes maybe, so the upper age limit is 70, and that's being retained. So no change there as such, although that was alluded to yesterday, that it's been retained. But what I suppose what they're doing really is providing for a clawback of the capital gains tax. So if you had got capital gains tax relief, so i.e. you didn't have to pay any capital gains tax on receipt of the business asset if you are a child or the children. Well, if you dispose of those assets within 12 years of receiving them, then the original capital gains tax bill would apply. Now, we're talking about the 10 million euro cap as well. So certainly from commentary I'd listened to yesterday and all, that 12-year piece is definitely the catch. So it's like it can be a long period of time to have to retain the assets, in fact, because a lot can happen in 12 years, really.
Yeah. David, any thoughts on that particular measure?
Yeah, so this was something that we were watching, and again, I'm not sure, and I'm not going to put Tom on the spot, but when we first looked at this, the announcement came out versus is it now that you can, so the age limit only came in, Tom, I think last year, wasn't it? It came
That's
in the
right.
final. Yeah. So that was the increase that we looked for then. But the feeling amongst our members was that quite sneakily then the cap of 10 million was put in. Okay. So I'm under no illusion, I'll just say it from here. This would be a very, very limited number of my members that would apply to. I kept talking about the cost of doing business and then saying boo-hoo with the 10 million. But look, the reality is for us, this was a precedent that was being set here that was a little bit concerning in terms of the cap of the 10 million. So the 10 million was an issue for those companies, and they were very concerned, those companies, and certainly some of the businesses I spoke to was as serious as looking at moving jurisdiction for those limited few, which I don't think is good for any of us. So I think in my limited knowledge then to go for a 12 years, was 6 years always the limit, Tom, is that right? Before,
It's
yeah.
always a shorter, yeah, it is always a shorter time period, and the threshold was lower as well. So
Yeah.
wasn't €3 million is my head up to €10 million, but that 10 then is subject to the 12-year cap. So
Yeah.
they kind of played around with the numbers a little bit. Yeah, I suppose. Yeah.
Look, 12 years in
Yeah.
business, God, lads, people come, you have a business started 2 or 3 times over in 12 years. So, I'd really love
Yeah.
to understand that logic. I mean, God, 12 years. I mean, 12 weeks is a long time in business. Never mind 12 years.
Yeah, it's the 12 year, it's that 12 year that gets me. Like, I think that's
Yeah.
that clawback period is yeah, it's interesting. Like, yeah. So anyway, they're obviously doing it to ensure the longevity of the family business and so on. But yeah. Okay, interesting.
Where's the
The other,
common sense here? Do you know what I
yeah,
mean? I think,
I know. Yeah,
again, strategy, long-term strategy. I mean, where's the common, like, who picked 12 years,
yeah,
as a figure, and just what's the logic there? And I mean, look, I think this comes back, and I kind of got myself in trouble a few times for this, but we have a policy direction and we have a revenue direction, and I think that whole arrangement needs to be certainly assessed. I think that's the
yeah. No, I think I would
politically
agree.
correct way I can say that.
Yeah, I would agree. And another question I have relation to the few and not the many, just like the CGT and the 10 million, is was there any change yesterday? There was a lot of media attention before the budget on pensions and that 2 million cap. Was there any change announced yesterday on that?
No, no, like the 2 million, we already knew that was going to 2.8 million anyway. But there's no change, actually, no increase in that threshold for 25.
Yeah.
That first 200k increase is happening in 26, Larissa. So 26 it'll go up by 2 million and 2 million each year till 2028. I think 2029 is it, whatever, 26, 27, 28, 29. Yeah, so 22.8 million then. But nothing outside of really of that to note, really. Yeah.
Yeah. Okay. And then the other
Mm.
point, then again, relating to the few and not the many, is the increase in inheritance tax thresholds that we've seen. I think did it go up to 400 for parent to child?
Yeah, that's right. So the
Yeah.
Group A parent-child threshold increasing from 335k to 400k, and that's for transfers within families, mainly parent-child. But the lower thresholds also changed as well. The Group B kind of brother-sister threshold, 32.5k now 40k, and the Group C threshold for all others, 16k up to 20k. Now, I suppose the Group A threshold is definitely a welcome increase. There hasn't been an increase in many years, so I suppose inflation alone would take you there. The increase in value of properties, etc. So I think it definitely helps anyway.
Yeah. Okay. David, what are your members' thoughts on those changes?
Look, our big one was capital gains tax, full stop.
Yeah.
And we have a very strong opinion that business owners take a risk, they take an investment, they pay their taxes, they employ their staff, they pay their VAT, the PRSI. They should be allowed to exit their business in a manner that they wish without paying the 5th highest CGT in Europe. So that was our big ask, and again, no particular movement on that as far as we saw in terms of the top line rate. But again, that's kind of a bigger question, but it is a bit frustrating in terms of being taxed on the way in, being taxed, being taxed throughout, and then being taxed on the way out the door. So again, for another year, I don't know how many years in a row that's been that there hasn't been a movement on the top line rate of CGT.
It doesn't seem to be a popular one politically at all, though, David, does it? I mean, the entrepreneur relief, for example, there's been very, very little discussion on any changes in that over the last few years. But I mean, you're absolutely right. Of course, we would say that we will want to see that because of the risk that business owners take. Okay, then the other thing I wanted to talk to you about was sustainability, that element of the supports given for energy. David, was there anything in there for your members?
Yeah, again, we were kind of looking at the detail of some of the areas. There was as we saw around the BIK, there was a couple of bits and pieces, but I suppose just to set the scene, what we're seeing from our members in terms of that sustainability agenda is they want to do their bit, they want to play their part. But the cost of investing, although there's some fantastic work out there from SBCI and then some money from Microfinance Ireland, I mean, they are all definitely positives in terms of trying to, and there's the energy efficiency grants, you know, they're all really, really positive. There's still the nudge, I suppose, for want of a better word, is not really there because it takes so long to see that payback over time. So that's, and I think that's just now a point in time whereby they've so many other extra costs, it just slips down the list of priorities. And it is still a priority. I don't want for 1 second to say that small businesses don't care about sustainability. They absolutely do. I'm just talking about, and when we do deal with government, the uptake in some of these grants isn't as strong.